Hi, I'm Beat Nussbaumer from macrobit.co.uk. The tension couldn't really be any bigger out there, even though if you look at the market during the week, you wouldn't really believe that we are at a crunch weekend in terms of Brexit. The market clearly seems to ignore the fact that the no-deal risk has obviously sharply increased if we believe all the news that we see out there. The market generally is very good in pricing the odds in terms of the likelihood of an event. This time I have to say the market is still pricing in a 90% chance of a Brexit deal, while I think the real risk is that we're probably closer to 50-50 at this point in time. Obviously, we have the big crunch weekend ahead, where it's not about deal or no deal potentially, but it could. On Sunday, they have to decide whether talks are going to continue or not. The EU signaled that they could continue until the 18th of December for the EU still to be able to ratify any potential deal that would have been reached. But reality is the sticking points are the same. They're telling us in 6 months, 95% of the deal is done, while the 5% are obviously the big sticking points. Sovereignty, the big word, the S word, I think, is the big risk of a deal falling apart. And so, what are the odds? I don't know. It definitely doesn't look great. The market still somehow believes that the UK government is bluffing. Both sides feel the other side has to move. So that's obviously not a very clever thing right now. And as I feared for the last 1 or 2 years, that the accidental no-deal Brexit is probably the biggest risk at that point. Yesterday, we had the ECB meeting. That was as expected. We really heard all already what they probably plan to do. That's what happened. So we got exactly what the market expected, which is just probably a bit underwhelming. But in any normal moment, a euro dollar would probably have rallied quite strongly, especially now where the dollar is so weak. But given the no deal Brexit risk hanging over the market, I think the rally was just contained and we focus on Brexit only before we start to focus on the Fed meeting next week. The first slide I have for you today is cable. As you can see, we've been trending upwards in the last few months. That's really on the basis of a weak dollar more than it is about sterling. But obviously, the last few days has seen a little bit of a correction in sterling, but by no means is the current level anywhere close to where it should be in a sense of where I feel the no deal Brexit risk currently is, which is probably around, definitely 40%, if not 50%. This still looks to me like more like a 10-15% risk the most. Of course, a no-deal Brexit, I mentioned that in one of the previous sessions. I guess we look at cable level of 120, and then we take it from there. A Brexit deal at this point would see a moderate 200-300 point rally the most, so the asymmetric risk is very clearly skewed to the downside. On the next chart, we see euro sterling. Euro sterling obviously has started to move up. So there, the sort of pricing the risk of no deal Brexit is clearly ahead in terms of if you compare it just with the chart we looked at in cable. It's still probably nowhere near where it will be on a no deal. I guess we could see euro sterling, which is not even on here, definitely back to 95, probably is closer back to 100 on a no deal Brexit. Next slide would be the FTSE. The FTSE is obviously underperforming if you compare it to the DAX, compared to US equities. We are still only at the 61.8 FIBO level here around 6,600, which is still way off the highs from early 2020, while we have US equities that trade above the all-time highs anyway. So there is some form of underperformance, which makes a lot of sense. I still think there's a risk of another shakeout, but it's 500 or lower, I don't know, on a no-deal Brexit. So the old correlation of lower sterling, higher FTSE will definitely break down on a no-deal, and both will head in the same direction, which is lower. Last slide, euro dollar. As you can see, I showed that last week, we sort of progressed new highs for the move on 21.75. Again, mainly kept due to the no-deal Brexit risk at this point. Should we get a deal, surprisingly, then I think the dollar weakness is back, and I still expect the euro to hit 125 by year end, as high as 127. This is it from me. Thank you very much indeed. Bye-bye.